All right. Good morning. Good morning. We got the live stream going. We're a little bit behind today, but we're here. How's everybody's morning? Hoyas, you have a hot mic, just so you know, just so nothing personal ends up on the stream. Let me go ahead and open up my comments on social, and let me get the link for you guys just in case anyone has any issues with the Discord stream. So let me put that in here. Are you guys able to hear me? If you can, please put a 1 in the chat. If not, put a 2, or I guess just don't type anything in the chat. All right. Thank you, Chris. Appreciate it. All right. So let's go ahead and build our list. So this week, we're doing something. Thank you, Charlie. You think I'm God. It's a little extreme, but your opinion is yours. All right. So it's the first week of the new strategy. So let me introduce you to a little friend of mine after we build our list here. Let me just erase all these, and then we'll just build out our watch list super quickly because it doesn't involve a lot of effort. So we know exactly how to do it very, very quickly. So I'm going to add MOBX. I'm going to add BATL because we love that one. SVRN. I like that one as well. TPET, we like this one, but I don't trust it because we had our run already on this one, so we got to be very cautious. ZD, I'm not going to add. I do like it, but I'm not going to add it. And then RUBI, I'm not going to add also. So I think I'm going to just these 4. I don't want to do anything super crazy today. So I've got 1304.99 in the account. Let me just pull up the sheet over here. All right, so 1304.99. My goal for today is to make 20 bucks, but we're going to take a new approach. So rather than doing the 1.5%, we're going to use this outcome matrix here, and we're going to change something, and it's going to be pretty cool. So instead of getting 1% on the first trade and every trade, we're going to shoot for 3%, and then we're going to increase our risk up to 1% per trade. So I'm going to use the 1% rule, basically, is what's going to happen. So let me just move this over here, and we got about 30 seconds till market open. All right, yeah, so instead of this, I'm going to be shooting for about $50, $60. So we'll see how that goes. And to do that, I'm going to use this little toy that I have. I made this over the weekend. So the total account value is not going to change, 1304.99. So instead, now if I put my entry in here and a stop loss in here, it'll calculate all kinds of stuff for me. More importantly, it'll just put this number in front of my face. It tells me how many shares to buy. So with that said, it also gives me a target and all that good stuff. So now that the market is open, let me just move this. And this sits on top of everything, which is pretty cool. So let's see what we got here. All right. So if, for example, I wanted to buy here, right, on this one, I'm just going to run this through really quick. So 45.87. And then let's say that I wanted to use the low of this right here. That would be 39.22. And then I wanted a 3% target. I would buy 196 shares. My target would be 66 cents. So that's pretty high up there. So obviously we got to be cautious with that. That's a 14.5% risk range. And then we've got a 7 cents per share. And then of course, 3 times that would be the target. And then that would give me my my $3, or my 3 times that 1% risk range. So again, I'm not going to use that on this trade because that risk range is pretty wide, but that would be the idea. So let's go ahead and plot some stuff out. I kind of like this setup here. I like BATL. Now, so far we've punctured the box, but we haven't gotten a new high. So I'm going to put a line right there. TPET I like, but it's pulling down a little bit. So for this one, I'm just looking for a break probably over that line. So let me draw some ranges really quickly. Okay, just those 2 ranges. SVRN. Let me just come down to the 2-minute as well. This is going to be more volume driven on this one. That's sub-dollar and it's trash. So again, it's one of those days where we have a lot of sub-dollar trash on the list this morning. So we got to be very cautious. Obviously, I think MOBX is going to be the top attractor for the day. So we just got some bid walls to pop up here. So I'm going to wait for a pullback on this one. They're going to want to try to push it over a new high, obviously. And it may just go, right? If it just goes, that's okay. I don't want to fight with it. Now I could go with my my 25% of the portfolio up to 4 buys, blah, blah, blah. And then that would give me a, you know, if I get a 12% risk range, I hit my 3%, but it would require a 12% move. So I don't want to do that. I'd rather just use the 1% rule and just be a little bit more methodical about the setup that I take. So we're taking a slightly different approach to the market today. We're not just going to be jumping in and catching the volume pops, because I want to show you guys there's a different way that we can trade these. All right, so I kind of like this. Okay, so 28.84. And then the low on this one would be the low of this candle here, which is 21.98. Now that is a huge, it's a 23.79% risk range. So I'm not going to be using that on a $20, $25 stock, because that would mean that I would need like a 60% move, which would put my target up to $49. So it's a little bit extreme. Oh, I put the wrong number in here. Oops, 24.84. Still, that'd be a 40% move, 46% move. Yeah, so I wouldn't want to do that on this stock. So I'm just waiting again, just for a better shot. This is in a nice little retrace here. So if I go down to like the 1 minute, you can see we got a nice impulse and then we're in a pullback. So this one might be a little bit more appealing. Let's see here, 53. And then what's the fib on that one's going to be 0.42. That's pretty extreme. And again, that would also require a 60% move. So I don't want to use that kind of range on a stock like this. Now, the alternative here is I can just use the ATR, right? I could say, all right, well, what percentage of the market price is the ATR? And that's another easy way to kind of gauge these a little bit quicker. So I'll show you that here in a second. Just come over here and take a peek at TPET here, because it's popping a little bit. Oh, somebody's got a hot mic or something. Oh, no worries, man. No worries. Just making sure nothing personal gets on the stream. We've had some bedroom activities on the stream a couple times. We've had some credit card company phone calls. Had some breakups. We've had all kinds of stuff. All right, so I'm just keeping my eyes peeled here. I like BATL. It did pop out of the box. I didn't get my entry on it, but that's okay. I'm really looking for MOBX to move up, because if that's the case, that breaks a triple top, and then that's going to be a much more substantial move. So in a situation like that, if like MOBX breaks, I would just put 50% of the portfolio in, which would be 652. So let me just get that ready just in case. And then I would just be looking for a 6% move, which would give me my 3%. Adrian, what's going on, buddy? Happy Tuesday. We're watching the volume kind of ebb and flow this morning. So TPET is looking juicy. Actually, I think that, so here's where it gets sticky, because 3 of these are really just volume setups. Like TPET's just a volume setup. It's very difficult on this time frame to read the structure. So I'm just waiting for these breakouts to happen. So if SVRN breaks over like 80 cents, or if TPET breaks over $2, or if MOBX breaks over 53 cents, that would be a structural break, which would be good. But TPET and SVRN are just volume. All right, this one here is going to unhalt in about 4 more minutes. Well, 5, but 3 and okay, so just under 3 minutes on that one. I would like to see a push out of this, but it's got to puncture the box first. Got a nice, beautiful wall here at 45. It's going to want to pull that liquidity up. TPET, you beautiful, beautiful beastie. This one wants to push over 2, and it's got a lot of liquidity sitting above 185. So we'll just have to see which one of these the volume wants to dump into first. So let me just check on MOBX. So if this one doesn't pull back to the box, I don't want to jump into it. I want to see a break into the box. I think TPET's probably going to be the next crowd favorite here. So again, we got kind of a crummy volume morning. You know, heavy earnings this week. It's going to be interesting all week. We got the Iran stuff going on, so I just got to be very careful which ones I choose to expose my money to. So I don't really like SVRN yet. It's got potential, but it needs volume. TPET I like a lot. I might just jump in as soon as this breaks over out of this box here. I might jump into that one. But I'm not going to be shooting for a huge profit range. I'd like to take my profits around 6% because for this, for the 2 volume or the 3 volume setups, I'm just going to be using half the account, and I'm going to be looking for a target at 6% to get my 3%. We got just under a minute here on BATL. The range on that's going to be 26.49 to 22.31. So it could unhaul down here right above the box or right up here. So let me just draw those boxes. And then 22.31 is going to be down here in the box. And then what did I say, 26.49? So right about there. A nice compression here on TPET. So, and then of course this one's pulling down. All right, so we'll just keep it on BATL. We got 18 seconds. And none of these are really moving, so I'm just chilling. I'm just hanging out. Nothing else really climbed up on the list either, so it's kind of one of those mornings where the volume's just kind of bleh. Nice little pops here and there in volume, but most of the time it's flat. All right, we're going to halt here, 27. Ooh, all right, so we popped up and then pulled right back down. So Weeble's not reflecting it, but we get that nice wick there. All right, let me just very quickly keep an eye over here on this order book. I like that. I don't like that wall at 2040 though. So if this candle can start get a pump on it, then I'll jump into that one on BATL. Otherwise, I just very quickly want to peek around and see what else we got going on here. Ooh, I like that setup. That's a lot of compression. But it just doesn't have volume. It's poopy. It's poopy volume. I think I'm going to jump into BATL here. Pretty high risk, obviously. And of course, I'd be okay to add one more buy here. So I'm using half the portfolio. And I'm seeking a 6% take profit. So 26.76 plus 6% is going to be 28.37. So right around here. That's going to be my goal. And I'm going to sell 3/4 of my shares there. So let me create a new order. Sell 75%. Now that's not going to give me my 3% and lock it in, but it is going to get most of the risk off the table, and that's my priority. So I'm setting a limit sell order in place for 18 of my 24 shares at 28.38 because I don't really want to contend with these wicks, but there's plenty of potential and a lot of strength on this one. I don't want to risk it through a halt though, so I'm just going to get most of the risk off the table. I'm also just going to close this out because this only really applies to one setup here and it's pulling down. So it's just extra stuff on my screen that I don't really want. And while that's going, man, this is such a good setup. If this could just get volume, this could very easily just pop up and break over this box. But it needs volume. TPET's pulling down, MOBX pulling down. BATL should get all that volume. It's got a nice, beautiful zone recovery setup on it. So pretty straightforward. We just need that volume to persist. You see it's got a ton of volume. It's got over 1 million shares for this kind of stock. It's good. Just needs a quick pop through this this stickiness here, and then we're golden. And then I can sell the remaining shares. Bam, 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 bam. So basically, it's got to get over $28. And then that's right here where it kind of stalled the last time. So let me draw a line. I'll make it dashed so we can see. And that's our breakout threshold right there. And I'm okay to add one more buy if needed, but I think we got plenty of strength right here. We just need these walls to get higher up on the ask. So right now, these guys are kind of offering a little bit more appealing liquidity. So that may pull the price down, in which case I have my other buy if I want to, but I'd rather just see it pop really quickly. And then let me just peek over here at these while that's going on. Got a nice 5 candle on this one, but no volume. SVRN, same thing, beautiful setup, no volume. It's gotta break out of this cluster here. And then MOBX obviously is just chilling. So nothing to do there. BATL showing a little bit of sketchiness still. It's just kind of chopping around a little bit. So we'll just let that cook its way. I almost just clicked this by accident because I have my mouse here. And I was trying to click and drag this, but I almost clicked and then unclicked. All right, so obviously, if I caught my earlier entry on this, we'd already be done, but I didn't really like what I was seeing down there in terms of the risk range. So let me kick up to the 5-minute on this. All right, so it looks like TPET's pulling down a little bit more. Now I'd like to see a bounce out of this box on this one. But because I'm in BATL, I can't add any more money to anything else because I want to keep that second buy, obviously, in case I have to average down on that one. And then SVRN is kind of in a double bottom territory here, but it needs volume, right? On the lower time frames, it's got a beautiful setup, but it needs volume. MOBX is showing great setup here, but it also needs volume, and it's got to get out of the shake zone. So basically this whole range right here, from there to maybe there, is just kind of a no-go zone. I mean, you could trade the inside of it, obviously, right? But it has to break out of that range. So we've got a zone recovery set up on this one as well, which is why I want it over 53 cents. So good potential, but without that volume, it's not going anywhere. All right, and then of course we got our beloved BATL, which should be blasting up to Jupiter here in a little bit. So it's got a beautiful zone recovery setup, multiple bots sitting on this one. You can see these symmetrical walls, a lot of market fills, which is good, which is what these white orders are. They're overlap agreements in price, but it's kind of slow, right? We want this to speed up. We want the ask walls to be at the top. We want the bid walls to be as far away from the top as possible. And we want this to just be rocking and rolling and just slamming white and green orders. Because we want the aggression to reach out and get filled on the bid. We want them to reach out to where the pending sell liquidity is so that those buyers can match and pull the price up. So that's what I would like to see. All right, so the ask walls are starting to climb up a little bit. Still got to wait, though. This is a patience game. And if we don't like drawdown, right, like I always say, if you don't like drawdown, you can choose not to participate. So we could have cut that nice and early if we wanted to, but I'm going to be doing it a little bit differently on my account. So I don't want you guys to copy me. All right, so this is MOBX. These two down here, by the way, SVRN and TPET, they haven't moved, right? So you get a little 5 candle break on TPET. You can draw the range. We already hit 25%. We're shooting for a retracement at this point, and then it decides whether or not it wants to go up or down, right? If it goes up, you've got this box to contend with. If it goes down, you've also got boxes down here to contend with. Let me just draw those. I'll draw that one that's transitory AF. And that's kind of all we really have on that one. So it's just not, it's not yummy. Yeah, I would love it if it came down here. Now it did, right? It did come down here, but I didn't, you know, we could have caught the 5 candle run out of there. We could have hit that 25% target and moved on, but it didn't have volume, right? We got to have a lot of participation if we want those bigger moves. So this definitely hit the 1.5% out of the box. So like if we took an entry on that color, the candle break right there, you get 2.15%. I would have been shooting for more, but because I want more, I need more conviction from the market, the participants. So I couldn't justify getting into that. And of course, SVRN is just dead. There's no volume. So it's likely to probably sell off and fail the double bottom. If it bounces, that's awesome, but I'm not going to be trading that one. There's nothing to it. MOBX is also just choppy in this range here. And then, of course, BATL is also, but it's got more spike volume. And that's what I'm relying on. I'm looking for big pumps in volume to just act like a haymaker and just drive the price beyond the absorption zone from the other side. So we'll see which way it goes. So today's a volume trading day. What is this? Please be advised that our third-party clearing provider is currently experiencing latency issues. As a result, order acknowledgements and execution may be delayed. We're actively working with the clearing provider to resolve the issue as quickly as possible. We appreciate your patience. It got truncated there. That's interesting. There's going to be so many conspiracy theorists out there blaming Iran for that. Because they're going to be out there trading SPY 0 days and get beat up, and then they're going to look for crazy, crazy things to pin it on. It's going to be sad. All right. MOBX still in the range. TPET kind of poking up over the orange box, but still in the range. SVRN dead in the water, selling off. It broke the double bottom. Yeah, there's people that are going to be buying into this, screaming liquidity sweep and blah, blah. That's not how this works. Oh, there we go. I just got the same message. You know, in order to have a liquidity sweep, the volume should have just came in right there and just blasted it. They're very quick. It's not something where the price hangs out below there, especially if you've got a very slow time in sales. Like I could see if they were actively trying to push it down and it was getting absorbed, and this thing should be slamming if that was the case. All right. Let's see if we can get our move here on BATL here pretty soon. Now we got a big wall at 26. They pulled most of the ask walls. They're pretty subdued right now, which means that they're going to be looking for that spike volume, right? So when the price gets to 27.46, for example, they're going to start triggering a bunch of orders, and then orders will dump in at 27.46. So the idea here is that everyone's kind of backing off these algos, and they're waiting for certain prices to get triggered so they can commit and just try to ambush the time and sales. So they're trying to seek liquidity from outside the range where the walls are at this point. So they're looking for a breakout. That's what that means, which is good for me because all the price has to do is move up, and then one of those walls could very easily send it over my target. So you can see we're getting bigger chops in price. There we go. That's what we're looking for right there. So right here, I could hit my sell all and just be done for the day. I kind of don't want to get stuck in halts. It's got about another 2.5%. But that's the kind of move that we're looking for, and that's why I'm just trading volume today. I don't trust any of this stuff. So now we're looking for a break over this wick right here. And if we can get that, then we've got room for a little extra move there. So we're in halt territory here, coming up in about 2%. And we got 20 seconds left on this candle. So I'm kind of glad that it's being a little bit slow right here because I don't want it to halt. So we broke over the wick. Now we see if there's going to be a liquidity. It doesn't look like it. That should have already just blasted to the downside. So now we got this area right here with multiple wicks. So if we can break through that, we're going to have a party. And it looks like we got plenty of strength to do it. As long as this 2850 wall doesn't pull price down, we'll be okay. So again, at this point, if I'm a new trader, I'm just looking for my target. I've already doubled my 1.5% target for the day. So I can just sell everything, walk away, or at least put a stop loss in place. That way, you know, if I do have to sell everything, then I've got protection and I don't give that profit back. And the only thoughts that I'm going to have to contend with here is going to be the what if. Like, what if I didn't sell? What if I get stopped out and then it runs? Blah, blah. And at that point, you shouldn't care because you hit your daily goal. So I'm going to continue holding my shares. I'm going to keep trading it just to show you like how to navigate a situation like this if you don't do that. But if you're a new trader, you're just looking for that goal, you just want to move on with your day, you could sell right here and still hit your goal or be very close to it at this point because we're just below 3%. Now we're back over. And the goal is that we could just be done. And that's the idea. We trade to trade less. So if you want to stare at charts longer, you can. But most traders don't get paid more to do that. So you're just kind of hanging out off the clock at that point. All right. So basically, I'm looking for a break over 29.40 so that we can get, let me move that, 29.40. That's going to kind of be our zone of interest there, 29.40, and that's based on the order book. So 29.39 is the large wall. And then we got another wall here to potentially chain fill up to 29.64. And then we should push over 30 at that point. So we'll see. There's a lot of stickiness up here, though. So the only reason I'm still holding this is because we didn't drastically sell off there. Because we just popped over here. We should have hit a bunch of absorption, and then we should have sold off. But we hit the absorption, but we're not giving up territory yet. So I'm still liking the volume that I see, even though it is descending a little bit. That was a huge push on a lot of volume. And we got about 80% of that volume on the subsequent candle here where we should have sold off. So it'll be interesting. So more haymakers. And you could see that crocodile just went under the water there, that 29 whatever wall. So they're doing the same thing. They're looking for big jumps in price on breakouts. So that's good for me. That's another indicator that I'm in the right neighborhood. So watch this 29 wall. You see there's only 307 shares. But watch what happens if the price gets to 29. Let me just move this green line here. So let me see if I can zoom in a little bit. So when it hits 29, it should stall, and then we should see a big jump up to maybe like a 30, 40 cent jump, which equates to about a 1 to 1.5% jump in candle size. So like from here to here, just boop. You see now they're putting them back, and we're getting a little more heavy on the bid. Now they're clustering these walls. This is great. So they're really trying to fight each other at this point. These algos, it's hilarious. So basically the price started pulling down. They put 3 clusters on the ask in order to stave off that sell-off and to pull the price up by just offering more appealing liquidity just above the current price. So basically they want to compel participation in these areas. So they're going to put walls up. Because remember, the exchange doesn't push price. It's not, that's not how the volume works. The volume is constantly seeking the best available agreement. So by providing these walls, they're offering better agreements in a closer area. So that's where price is likely to push to. Because it's just trying to resolve all these pending orders as efficiently as it can. You can see right now we got a ton of market fills, these mids. But it's slow, right? Again, we need the volume to speed up. We need the volume to just surge in, and that's the kind of day it is. We're looking for spikes in volume that are directional. So we've got the setup here. This is the lightning rod. We just need the volume. We need the actual strike for it to flesh out and reach out and zap that $30 level in the booty. So let me just peek over here. Ooh, MLBX, nice little setup on that. See, I don't like it in this range. I still have half my portfolio in cash, by the way, so I could trade another one, but I'm not going to trade this one, but this is a good setup. It just doesn't have volume, right? So today, we identified today is a volume day, so I need volume in order to trade any of these. That's a nice little 5 candle with a pop. I like that one, but it's not in an area of potential, so I can't touch it. My hands are tied. And again, it doesn't have volume. It's only 500,000 shares. So if it wants to go, that's great, but I don't need to be part of it. TPET gave itself a nice, so if I draw this retracement, watch where that pivot is. That's awesome. It's like right in the middle of the 50 to 61.8. We got a 5 candle and now it's rejecting to the downside. So this outcome right here is the one that came true so far. So me likey. And then of course BATL is pulling back to our original area. So right back at break even on the other 25% of my shares. And again, even now, I'm still above my 1.5% daily goal. I would like 3%. I was above 3%. I chose to keep holding. And I still like what I see, but I could have very easily walked away with my 3% if I was a new trader and that's all I was after. Okay. So I personally still have plenty to do. I still have half my portfolio if I need it. I've still got 25% of my shares in this original position. And I've got 3 other tickers that I may or may not like at some point later in the morning. But without that volume, I don't like any of them. And nothing else has changed here. EDSA has pulled up on the list a little bit. Let me just draw a box there. But again, I don't really like it. So nothing's screaming out to me just at the moment. SVRN's pulling up, obviously. And remember, that's the kind of volume I said it was likely to break out of this box right here. But again, still on super low volume. I don't really like that. That's sketchy. I like it. I love the move. And I love the volume while it's here, but I don't want to try to time the ebb and flow of that volume on a stock like this. Like if it was a better quality setup, absolutely. But I can't trust this, and that's likely to halt here in about, yeah, that should be halting anytime. That should be an LUDP halt. It's good that it's getting pullback. I'll tell you that much. Stuff like that. That's super sketchy. What's the float on that one? That's 18.05 million. They've got like a 2-to-1 ratio almost of restricted shares, so sketchy. Yeah, it's a weird one. Good move. It just wasn't in a good area with good volume. But I like the move. That was nice. That's just part of this deeper retrace. So if you measure that impulse there, you just popped into the 50% range, and now you're in decision territory, right? We move up or we move down. But again, even this doesn't line up. So in order for this to be a successful trade, we want to see it push up over this box right here, right? We want it to, I'll just draw it. We want it to push up, retest, and then continue moving. That's the only thing I'd be willing to accept on a stock like this on a day like today. So anything shy of that, I don't want to be part of. TPET here is doing okay, but again, no volume. So it's just kind of coasting around. So this is when I'd look at the higher time frame and be like, yep, it's moving box to box. That's great. But again, not with conviction. So sketchy stuff. Looks like we're getting a little pop on this one. That's a 5 candle break. That counts. But I want to see how this reacts to, damn, it just shot up into that $28. I was going to say there's a wall here. If you're watching the recording, you can just rewind it a couple of seconds and just look at the order book here and then look at that $28 wall. And then you just see the price go boom, boom, boom. Now time in sales is kind of speeding up and slowing down. So right here, for example, it's speeding up and we're approaching that $28 level. Only $14.41 at that $28 wall. So we're getting a lot of market participation into the wall. But it's gotta be dominant orders on the ask. So right now you got a group of participants sitting here at $28 saying, hey, come hang out with us, play with us, give us your money, we'll give you shares, or give us your shares, we'll give you money. Buyers and sellers can both exist on the ask at the same time. And then the price is just kind of hanging out. So there's little tiny walls in the way here to help facilitate that liquidity and to pull the price to the upside by offering better and better fills. And then it just slammed up past that $28. The one that I'm interested in is at $29. I want to see a pop out of 29 up to 29.40 very, very quickly. That's what I'm looking for. So as soon as it hits 29, we might see a small stutter, and then we should just immediately hit 29.40, just like we just did with 28 to 28.16. That's what I'm looking for, but it's got to get there, right? We've got descending volume for the last, 10 minutes or so, 11 minutes. So right now we're just being patient. We got a bunch of walls here to chain fill, 28.70, 28.96. And again, I just want to see price come up, hit 29, stall, maybe do a little heartbeat, and then stall, and then immediately shoot up to 29.40 or higher. So there's the stall. I want it to stay up here, though. I want it to stay right at 29. Just for like half a second to a second. There we go. And then I just want to see a quick pop up to 29.40. There's our heartbeat. I don't know if you guys can see that. Let me zoom in. There's a little heartbeat right here. I want it to stop right here for a second and then just boop, right to the upside. So far it's still resolving, right? Oh, TPAT warning? Yeah, let's take a look at that real quick. You guys know the plan on BATL. Nice, good pop on that one. Good influx of volume. Still a sketchy setup though. Sketchy. All right, let's peek back over here at BATL. So we didn't get our stall on our pop here, so we're pulling back a little bit on BATL. Still has to get up in $2. Yeah. TPAT's gotta break over 2 and commit. But it's got plenty of juice. I like the potential. I like the ask setup here. A little bit steeper, way down lower on the bid. We got some big clusters down here at 150, 155, but you got some beautiful potential here at like 203 up to 210. So let me just draw a box. And that'll kind of be a momentum range if the price wants to push in there and go. Now you've got wicks over here too, so you got to be mindful of that stickiness. So that express lane there is going to have some speed bumps on it. So if it could just slam through those, you're good. Let me just peek back over here at BATL because this is the one that I'm currently in. I'm just writing out 25% of my original position here. So they just slapped a bid wall here at 27.65. Because remember, they're trying to offer more appealing offers. 28.65 wall got partially filled and pulled. You can see a lot of market orders coming in. These mid fills here are all market orders. And that means they're aggressive. So the reason this works for us is because when you see white orders come in, they're mid fills, which means they got filled between the bid and the ask. So there's currently like a 7-cent spread. So unless people are putting in ask fills and getting matched at the ask, which they're not because they're mid fills, this tells me that these are market fills. Market buys and sells are both coming in and then being matched with existing and pending limit buys and sells. So equal and opposite, but the market orders are the aggressive party. The limit orders that are sitting there are the passive party, and that is what moves price. So if the market orders come in this case, and they're predominantly buying orders, or they're sell orders that get filled above the mid price, then the price will go up. But they're always going to be matched with either a pending limit buy or a pending limit sell order that's sitting on the bid or the ask. So all I need to do is make sure that my ask orders are getting filled more than the bid orders. So if I see the price here is 27.60, 20 or 27.70 and 28, I can see where the mid price is, and I could say, all right, 27.70 is 8 cents below this fill right here. 28 is 2 cents, or I'm sorry, 12 cents away. So I can kind of see where the mid price is in relation to the bid or the ask to see what's available. So right now I like what I see. I see 27.90 and then 27, what was it? 27, it was like 84 or something like that. 27.87. So if I look at 28.48 here, I could see 28.17 coming through, and in 28.01, 28.20. So we're starting to feel a little bit heavier on the ask. So this is good for me based on what I'm seeing. But now we need volume. I need this to speed up and keep doing what it was just doing. So those are little spot checks you can do. Now, what I don't like here is there's an 80-cent spread. So I don't like the fact that the bid-ask spread is so wide, and then it's pinching, and then it's wide, and then it's pinching. And that's just the result of this ebb and flow of volume. So what's happening here is pretend that this box is the heartbeat of the volume. We're just doing this, right? That's like a regular pattern. But what we're actually doing is something like this. So it's causing a lot of uncertainty within this bid-ask spread because the market makers are having to constantly adjust. So I'm really just looking for it to break out of this area here. And then that's when we'll just get more clean directional volume, and then we'll get a more smooth upscale on that ascending part of that curve. So basically we're forming a little wedge right here. So if I draw that, you guys can see right there. That's our wedge. And we got a lot of strength here. So we should be breaking to the upside, just enough for a quick pop. And again, I'm just shooting for 30 here. Then I'll sell another 75% of my shares, or maybe at 29.40. It depends on how the volume behaves. But I'm just looking for these surges in volume. I don't really care what happens too much during the outflow, but I want to catch those quick volume pops. And again, I'm back around or just above. Now I'm just below, but I'm at my 3% for the day. So if I have to go, if someone starts calling me and I just want to walk away for the day, I can do that. Or if I just want to hit my target and leave, I can do that. Oh, there's TPET. Look at that. So again, it did fill the momentum gap, but now we're seeing that stickiness come in that we talked about. So good stuff, but now we look for a rejection or a breakout and a retest and continuation. So this is sketchy right here. This is the highest risk, highest possible risk area. Elizabeth, I got my 1% on TPET. Oh, you must have wrote that earlier, my bad. But you're out. Good stuff. Are you done for the day? Hell yeah, if so, that's awesome. All right, MOBX still just struggling. There's no volume on it. It's just kind of chilling in that range. SVRN, it doesn't have enough separation here, in my opinion. So I don't really like it here. I would like to see a bigger separation, then a pullback, and then a retest. But either way, there's no volume, so nothing really worth losing sleep over. And then TPET. So you're done with the day, you hit your goal, and you have money left. That's awesome. That is a successful trading day. And a profitable one. Remember, the profit is secondary. If you follow your plan and you walk away with your goal met, and you know that's your goal being different than your profit target, your goal should be 100% execution on your trading plan with discipline. There we go. We're starting to get a little push-pull situation here. So we got a little harami here and a break to the upside. Very, very loose, though. So we're basically just looking for a break to the upside on BATL here in the next couple minutes. 28.50 is going to be a key area there. Yeah, I mean, if you follow your trading plan from start to finish and you're consistent and confident and you don't have friction within execution, or if you walk away with good data, that's a successful day. I don't really care about the P&L, no offense, but but I'm glad you were able to hit your goal and you were done for the day. My goal is to have a green day since I'm still learning, but I want to get 1% a day. Yeah, and that 1% will compound nicely across the 250 plus trading sessions in a year. So I love that goal. I think that's a very, I don't know if I'm legally allowed to say achievable, but it's more achievable than shooting for 27% every single day and nailing, all kinds of naked options on a small account. It's safer, right? And I say that because you're going to be getting out. You're taking your risk off the table a lot sooner than most other traders, and most other traders lose because they don't know how to walk away. If you look at trading and you really break down the statistics, a lot of the red trades that traders have spend at least some amount of time, and I'd say maybe 90% of trades, in that 1% to 3% range. The problem is that's not good enough, and then we want more, and then we refuse the profit, and we watch it go negative, and then we beat ourselves up, and then we say, oh, all I ever do is lose. Well, that's not the case. You're holding too long in that case, and you don't put stop losses in place, and you don't mitigate that out the end result where the trade just starts off green, even if it's a little bit, and then it just turns red. So when stuff's green, we can always move stop losses up. There's no harm in just breaking even on most of your trades. That is such a small, insignificant outcome. And the biggest obstacle there is just opportunity cost, because you don't want to walk away without a profit, right? But again, most trades spend time in green before they turn red. So it's up to us as individuals, while we're there in the moment, to determine, is this profit good enough or do I want more? And if so, how do I get the best of both worlds there and do it in a safe way? We just got a nice little harami on this one. So this is a double harami. So if I draw, let me just zoom in really quick. So inside candle, right? 2 lower highs followed by, on the same candles, 2 higher lows. So this right here means that the next 2 candles here should be pretty decisive in terms of a big surge in volume. So I don't really care which directions it goes. I just need it to go up here at some point. Otherwise, I could always just break even, but it's looking really, really good here on the ask wall. So we should be pretty good. Whether or not that goes, I don't really have that answer yet because the price hasn't unlocked that information for me. All right, so there we go. Now I don't want to get in a halt either. So let me just, okay, we got plenty of room to gallop on that. All right, so I'm going to create an order here, and I'm going to look to sell another 75% if we can get it. I'm going to sell at $29.98, so I'm not fighting with a $30 level. But I'm going to sell 4 of my remaining 6 shares at $29.98 if the price wants to return there. But you can see when we hit 29, we shot right up to $29.40. That's what I was looking for. That's like seeing a street sign. It's telling me I'm still on the right area. Now I just have to wait for traffic to kind of ungridlock itself and then start flowing again. And if it pulls down, remember, I still have half my portfolio. I have only used half of my cash today, and I've locked, 75% of what I did commit already. And I've got a plan to commit to lock another 75% of the 25% I have left. And I'm still well above my goal. My initial goal being 1.5%. So I'm able to shoot for 3% and I'm achieving 3%. I can walk away at any time and get my 1.5%. Because here's how it works, right? I locked 75% at 6%, which means I get to walk away with 3/4 of 6% on half a portfolio. So for those who want to do some fractions there, that is 75% of 3%, right? Because half at 6%. So 3/4 of 3% is my minimum profit for the day. So now they're offering this nice appealing wall at 27.90, which just got filled and pulled. So now we've got a delicious wall here at 28.62 as a response. And then let's see if that one can push back up over 29. So we dipped, and now we should, in theory, we should rip here pretty soon. So I'd say the next 2 minutes or so. How's TPET doing? It looks like it pulled back below 2. Oh, this is so tempting. I like this setup. It just needs volume. But this is pretty good in terms of setup go as far as like this morning goes, right? This is more structural. So at this point, we would be looking for, again, just a quick little run. Now I'm not going to trade this, but I'll plot the lines, right? I'll put this here, and then in 10 seconds, let me just move this down early. And this would be a case where we'd use this, right? So we can say, what is our portfolio value? Would be 13. What was the original number? It was 1304.99. And then our entry here would be 197. And then our stop loss would be the low of these participating candles here. So 193. So we'd buy 326 shares at 642.22. Ooh, I might actually grab this one. Okay. So I'm going to see if I like this. Actually, I'm going to drop this down to 320 just because I don't want to have potential liquidity or buying power issues. Now my target there is going to be 209. So let me just hit the buy button here. And then my target's going to be up here at 209. Let me make that there. All right, I'm going to close this out. You guys see what I did there? I'm setting this up to get my my 3% on this one trade. So I've got 2 trades open. Now, if this trade, TPET, this fresh trade here, gets up to 209, I will achieve 3% overall. So that's a net 3% on top of what I've already got. And my stop loss goes right here at 192 or 193. So it'd be 192 for the fill. So at this point, I could put a bracket in place and do all that, but I'm just going to see if it wants to give me the trade. And I'll just exit manually. Delicious. So you see we have a 5 candle coming into an area, and then we're getting a volume surge out of the area. That's all I look for. We got Haramis on the 5. Yeah, we got 1. Yeah. We'll see where it goes. Right. And then worst case scenario is we come down here and we stop out, right? And then I lose 1%. So it's a 1-to-3 ratio. And I'm only comfortable jumping into this trade because I've already locked 75% and guaranteed myself a net profit on BATL. So if I needed to average down still, then I'd be keeping that cash reserve, but we're out of that territory, so I can then free myself up for the second trade. I don't really like what it's doing here. I'd like to see it just push because we're coming out of a 5 candle break and out of an area of massive violence. So we should just push. All right, BATL is also just kind of being weird. I think I'm going to remove this sell order here, and I'm just going to sell it manually when the price gets back up there. We got 40 seconds left on that, and then we get another Harami here. We got a trend line that we're competing with here. I don't like that. I'd rather just see it blast. I don't want to see these prices kind of hanging out sideways. So by using the 1% rule and ensuring that our risk ranges are certain sizes, we can then look for multiple trades in a day instead of just doing one trade and kind of being done like a lot of traders believe. I think I'm just going to exit BATL here. I don't like what it's doing. I don't care if it goes up after that. I just don't like what it's doing right now. I'd much rather just get out. All right, looks like this one's also a little premature on that one, but that's okay. I'd rather preserve my target here. And I might have just jumped out of that a little early, but I'd rather not risk it either way. I don't like what it's doing here. Not quite pushing over, but T-Pet's getting some hee-hee-hoos in. I'm not sure what that means. Yeah, I would have just stopped out right there anyway. Yeah, so at this case, I don't like what these are doing. It's already a sketchy morning. I don't want to compete with these if like the two top runners are deciding to turn over and go to the downside. Everything else has failed. So I did the best opportunities that I saw, and we just didn't go up. Basically, we got our profit. We walked away. So I didn't quite get my 3%, and that's okay. But I did get as close as possible to my 1.5%. I got 1.49%. I hope no one crucifies me over that. I think we did okay. Let me just fill in the sheet real quick. So my goal is to get to 1324.56. I got to 1324.42. So I failed, and I have to give up trading now. And I am going to put yes here because I did deviate. Prematurely exited at sell trigger instead of below on was that TPET. Okay, so that is a deviation, which means that I'm going to go practice now. I got a drill that I'm going to take, and that's going to reprogram that piece of data that I just stored in my brain that said, hey, it's okay to do this. I'm going to say, it's okay to do this, but next time let's do this. So instead of pushing my button as soon as the price was triggered here, and that's because it overlapped with this opaque, semi-opaque box here. I already know exactly what caused that in my brain because that's something I work on. If these were two lines, that wouldn't have happened. I'm pretty confident in that, but because it's a shape that has a fill, that messed with the way that I perceive that information. I hit the button a little bit early. So in that case, I walk away with my target almost. I mean, no one's going to crucify me over 0.01%, I hope. And that's because I used market fills to get out. But I walk away with my goal met, I would say. We spent some time above 3%. So again, there's value in that as well. And then we got to use the new approach twice on 2 trades, which is pretty awesome. And then more importantly, we get some valuable data on a deviation that I had. So I can walk away with that as a profitable and successful day. And then BATL, it looks like it's just puttering around. That volume just died. So no need to risk it on that one. Did you go over new approach? Sort of. So I talked about the 1% rule. So, and just for, actually, yeah, let's just talk about that because I'm on the recording here. So I built this little tool. And basically the 1% rule, let me just pull up a notepad here. All right. So I'll just run you guys through this really quick. Well, I'll just cover up the price because there's no point in looking at price. So the 1% rule is pretty cool. Now there's a little bit of math involved, but it's not as complicated as it has to be. Okay. It can be very, very simple if we make it simple. So let's say that I've got a $1,000 account. Okay. The first step is determine 1% of TAV, which is total account value. Okay. So 1% of that equals $10. All right. So that is my max risk. So just for the common sense approach of this, I am just looking for the number of shares that I need to buy with a given risk range to determine and to ensure that the maximum amount that I lose is $10. Okay. So if it's a $1 risk range on the shares, I should only buy 10 shares. If it's a $2 risk range, I should only buy 5 shares. If it's a $5 risk range, I should only buy 2 shares. Does that make sense? And when I say risk range, I'm looking for the distance between the entry and the stop loss. Charlie, I made this tool. I'll open up Visual Studio here. And you can see, I'll just kind of show you what it looks like. Come on. I'll just show you that really quick. And if any of you guys want to be programmers, you can. I would like to distribute this. I'd like to just give it to you guys. So you can see here, it's just the box. So I've got some labels. I've got some text boxes. I've got another label and text box, or sorry, just a label here. And then I've got a button, and that's it. And then I customize the window so that it stays on top and it doesn't have like the weird buttons and the control boxes. Then on the formdesigner.cs, I assign things. Anything that the designer doesn't do for me, like it creates the stuff when I drag and drop it, but then you can attach handlers to things as well. So right here, for example, or let me see. Yeah, right here. So there's a load form handler, blah, 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 blah. And then here's the actual code. So this is where we calculate like the target price, for example, is entry plus risk per share times ratio, and so on and so forth. And then you just update the labels, or in this case, the text boxes specifically, convert them to the appropriate string type. So it's either currency or 2-digit %. And then this one right here is the most important one. It tells me how many shares to buy. And then I've got a bunch of empty emit handlers because I just double click stuff. So that's it. That's the long and short of it. So I'm going to close that out and then we'll get back to the 1% rule. So step one is to determine 1% of your total account value, which is pretty straightforward. You're just moving the decimal point twice. Okay. Then once you've got your step one, step two is to determine your risk range. And that is just going to be, let's erase all these tools. Okay. Let's just say that we're looking for a breakout over this and we want to use that as a pivot, right? So we got 194 down to 188. I'm going to close this as well. That is a 6-cent risk range. Okay. And in order to do that, I can also just use the long position tool and I can just drag those into place. And then I can also, the tool will tell me the 1 to 3 take profit, but I can just do that if I want to. So in this case, I've got 194 and 188. So that's 6%. So I've got entry 194, stop loss 198, which means the risk range is 6 cents. Now, step 3, determine how many R's go into, the 1%. Right? So I need to figure out how many times 6 cents goes into $10, right? 0.06, I'm sorry, 10 divided by 0.06 equals, and then let me just whip out a calculator real quick. 10 divided by 0.06, that's going to be 166 shares. I always want to round down. Because I don't want to buy more, because then that would risk me losing more than 1%. Step 4 is to determine the target at ratio, right? So if my risk range is 6 cents, I need my target 0.06 times ratio equals 0.06 times 3, which would be 0.18, right? And then I need to do step 5, and this is just setting up the trade. Set order, right? And so my target in this case would be 18 cents plus my entry at 194, which is going to be at 112. Right, because it's going to be 194 plus profit range, which is times ratio, which is 3, right? And it looks complicated, but basically we're just looking at the risk range and then we're tripling it and adding it to the entry price. So we have a 1 to 3 ratio on our take profit. Okay. And then I already know that if I buy 166 shares and I've got a 6 cent risk range and an 18% target, I'll walk away with a net loss of 1%, which is $10, or a net profit of $30, which is 3%. Now I need to also just understand how much it's going to cost. So 166 times the entry price of 194 is going to be $322.04. So if I have $1,000, that leaves me with $677.96 in free cash. And then I can use that for other trades. So if I see this exact setup 3 times, I can trade that. I can do that 3 times. Does that make sense? And the cheater's trick here, right? The easy way is to just take this, you see the stop percent where it says 3.09%. You just do 1,000 divided by 3.09, right? Because you're just moving the decimal point. That's all we're doing here. And that tells me I would risk about $323. So it's a rough ballpark, but you get around the same results if you do it that way. It's a little bit more cut and dry, but it's a much faster way to do it. Because if I say, all right, I want to use a third of my account, I know to use less than 333 on a $1,000 account, which means I know how many shares I'd buy, what my risk range would be, what my target range would be, and I can just do this on the fly. So what I could do in that case, and I've done this before, is that I could essentially fill out a range card where I can say, all right, if it's a 1% risk range, how many dollars would I be committing? If it's a 2% risk range, how many dollars would I be committing? And if you want, I can actually do that right now. And you guys are probably already familiar with this. So what's the number here? 13. Well, I'll leave it at 1,000 for now, right? That's my account value. And then if this is a 1%, 2%, 3%, 4%, 5%, 6%, 7%, so on and so forth, right? Let me just push this down to like 20% or whatever. Oh, 20 on the dot. Look at that. All right. So now I know that I can just look at the risk range, right? I could say risk range as a percent. And then I could say, all right, well, how many dollars is this of my account? So I could say 1,000 divided by 1, which would be 1%. So I could say A1, divided by A3. I need an equal sign. I'm a dum-dum. It's been a while since I used this. But I need to modify this formula, right? Because it's going to divide by a percent, which means that it would multiply, and we don't want that. So basically what I'm looking for here, instead of setting these as percents, I'm just going to do 1, 2, 3, 4, so on and so forth. And let me just drag this back down as well. And we'll go down to here, and then 2 more. All right, now you can see it's changed, right? Now I can just drag this formula down, and it tells me how many dollars to use for each of those buys. So if the risk range is 1%, I use all $1,000 because it's a 1-to-1 ratio. If I risk the entire portfolio, so 1% or less risk range, the max I could possibly lose is 1%. If it's a 1% risk range and I throw every dollar I have into it, I can only lose 1%, right? Assuming I stop out at 1%. If it's half the portfolio, if it's a 2% risk range, I can put half the portfolio in. And then if I lose 2% on half, right? Again, it's a 1-to-1. Right? So we're just dividing by 1 in this case, which makes it the same number. Then my end result here would be losing $10, right? If it's a third, or if it's 3% risk range like this one, right? That means that I'd risk 333 maximum, okay? If it's a 4% risk range, I use a quarter of the portfolio. If it's a 5% risk range, I use a fifth of the portfolio, so on and so forth. Does that correlation make sense? It's just a quick mental way to say, all right, well, how many dollars do I need to risk maximum on whatever my account size is? Let's say we do 13, 24, 42 now, right? So I've got this range card built out where I could say, all right, well, if I've got, $26,000, right? And I've got a 4% risk range, I know that I need to commit $6,500 or less to this one position. And if I lose, and I stop out at 4%, I lose 1% overall, which is $2,600. No, it's $260. I lied. That was a test. You were all paying attention. If I win, I get 3% overall, which is, I'll just put this up here, equals A1 times 1.01 equals A1 times 1.03. All right. So those are the only, actually, let me just multiply them. I'll show the raw profit. There you go. So if I have a 4% trade, I risk that. I'm going to get $260 loss or a $780 win. If it's a 3% and I use this amount, I get the same exact outcome. If it's 6% and I use this dollar amount, I walk away with the same end result. So the idea here is that I've got now a variable that I can plug into a formula and get this result, which will give me these two defined outcomes no matter what. Does that make sense? Oh, you are, I didn't move a decimal 2 spots. I only moved it 1. But this is the goal. The goal is to make sure that no matter what the risk range is on any trade, we get the same 2 outcomes if we're using the same ratio of a 1 to 3. Does that make sense? So this frees us up from having to take tight stops. The downside here is that as the risk range expands, in order to ensure this ratio, the target also expands. So that's the trade-off. So if you have a high volatility day, this tends to work better. If you've got a lot of chop, you're going to get stopped out more frequent with the other approach, but that's okay because you're still managing your risk really well. So in this case, we get the best of both worlds at that trade-off, and then we can just make sure that our dollar amounts are exactly the same no matter what. So 1324.42. So 1% of that is 1324. So that's my max risk for any one trade. And my minimum or my expected profit should be 39.73 if I have that 1 to 3 ratio in place. It doesn't matter if the risk range is 1%, 2%, 3%, blah, blah, blah. It doesn't matter. So what I can do now is I can make a formula here, A1 times, and then we can just divide, I guess it'd be 100 divided by, we'll do, I'm trying to think here. What do we think is best? Oh, nope, don't want filter keys. Sorry about that noise, by the way, if you guys heard that. That's always annoying. All right, so A1, let's do E3. All right. Now, I also need to multiply this times 1, right? Because that's our, what am I dividing by 0 for here? All right, so A1, just going to sanity check this real quick, times, let's just do E3. Oh, A3. Oh, no, E3. Doy. I'm an idiot. I didn't put a value in. Oh, that's funny. Okay, so now I just need to put that formula back, basically. Okay, 1.5. All right, so obviously we got some numbers here, so I got to... oh, no, not that. Not that one. What am I doing here? Okay, so E3 times 1, which the times 1 is kind of redundant. I'm just using this to copy and paste for the target, just so you guys can see the ratio here. Okay, so why am I multiplying by 100? You dummy. Oh, yeah, I'm an idiot. Okay. Yeah, let's just do that. What I'll do is I'll just convert this to a regular number there. And then we'll just copy this, paste that, and then we'll just change this to A1 E3 times 3. Okay. All right, so this is the idea. Basically, we're just going to use a 0.01. So this is our 1% risk range, and then we've got the account value here, 1324.42 times 1%, and then times 3%. Okay, so that is our max risk calculation. Okay, so it's just that number, your portfolio value, times, and then whatever 1% risk range that you want, or 1% max that you'd like to risk. So now we're not just putting, it's just we're breaking out this formula a little bit. So instead of 0.01, 0.03, what we can then do is we can then just ensure that no matter what our risk range is, we've got the same end result here in terms of the risk versus reward. So instead of changing like if we're going to change the risk range and the target range, we just have to change the dollar amount so the position size can accurately offset. Okay, I don't want to go too far down the rabbit hole on that, but that's all we're trying to accomplish. Is just to make sure that no matter what we risk, percentage-wise over the range, we get the same two outcomes. If we're using the same ratio, of course. If I wanted to risk no more than 2%, okay, those numbers would double. But then that really would be difficult because then I would have to make sure that my minimum risk range was 2% on every trade. So I couldn't trade a 1% setup here because it would require me to commit twice the account value, and I can't do that. So that's why I just like the 1%, because it's just it's kind of like an all or none. Yes. So does that make sense so far? I know I'm kind of beating on the 1% rule quite a bit. I hope you all understand the process there. Range card. And this is, if you're doing marksmanship, for example, snipers, they build out range cards so they can identify terrain features. And I'll pull one up here real quick. I can't type. Range card. There we go. It's just so you can identify specific landmarks and known ranges, and then you can plot those out ahead of time. So when it's time to take your shot, you know exactly how far away things are, and you know exactly how to zero your rifle and look for your wind and all that good stuff. And then you can land your shot more consistently because you have these known ranges and directions. And that obviously factors in your muzzle velocity and all that good stuff. Those are relatively fixed, assuming you're not like cold bore versus. I mean, that gets a little more complicated because there's more real world moving parts, but this does not. This is just identify a range and then change your position size if you want to keep your outcomes consistent. All right. So with that said, I'm going to end the live stream portion of this. I'll hang out with you guys in Discord, but I'm going to end it on socials. If you guys are interested, I'm going to put the link there on the social media platforms. If you are a new subscriber, you get a 50% discount. I don't know where my comment just went. Sorry about that. For your 50% discount. So I put the link there on social media. If you guys use the code NEW50, NEW50, you get 50% off if you're a new subscriber. So always worth checking into to see when we're offering stuff. But we used to have a free trial, and the 5 days just wasn't long enough for most newer traders to get accustomed to all the stuff we have in Discord. So we decided, rather than just trying to cram everything in those 5 days, and then, if there's like a holiday, they only get 4 days and so on and so forth. We decided just to offer a massive discount back to kind of our original pricing point back during COVID, was about $70. And then that way you get the full month, and then you can decide whether or not you get value out of what we offer here. So it just seems like it's a much better approach. We're getting a lot more interest in that approach, and we're getting better results because people are here for more than that week, which means that they get more exposure to education and to risk management stuff. So we're not just a pump and dump group. And then as far as what you get a bunch of stuff. You get a lot of live streams, you get more live streams, you get access to all 3 coaching programs. We changed that recently as well. I'm only a coach in premium. I don't have a standalone coaching program. So the only way you can get into my coaching program, which my next class is tomorrow at 2 p.m. Eastern, that's the only way you can get in there. I'm also the lifetime coach, but that is a little bit more out of reach for traders. So what I usually recommend is start off with one of the coaching programs, or in premium if you like. You get all the extra alerts and live streams. And then if I can't make you money in there to build you up into lifetime, then I have failed. So we've had quite a few members that have been able to grow from premium into lifetime, but that is not always the case, which is why I don't typically encourage people to start there, because it is a bigger commitment. Not in terms of time and all that good stuff, but just it's a dollar commitment. And there's a lot more features, so I don't want everyone to get too overwhelmed. So I usually recommend starting with a coaching program or just in premium, but I wouldn't personally go any higher if you're new to us. Okay. So with that said, I am going to end the recording on socials, and then I got to do a little bit of house cleaning stuff. I have to move the recording off our host and all that good stuff. So let me end that. I'll hang out with the people in Discord, and we'll wrap the stream up here in a moment. But let me end this.